Good morning, good afternoon, good evening. My name is Michael, and I am the co-founder of BackToTheFutureTrading.com. The face you see in all the videos, if you've ever come across one of our YouTube or Instagram videos and said, that guy's head looks like a giant potato, I'm the guy. And so it's a pleasure to be here with you this afternoon. Thank you very much for hanging out with us. And I wanted to help identify some strategies that traders can use to ameliorate the effects of the fight or flight response that kicks in. For those of you that have been trading for more than 5 minutes, part of the problem that most people experience with lagging indicators involves something called the fight or flight response. And that basically means you either run or you kill. You either run or you fight back, right, when cornered. And when most people are using lagging indicators, there's a few behavior patterns that inevitably arise. Number one is overtrading. You take way too many trades and time starts to dilate. You don't realize hours have passed and you've taken 20, 30 trades or more. Number two, people move their stop losses because trading represents risk and risk equals pain. When your stop losses hit, you're inclined to move your stop losses further and further away from your entries to alleviate that sensation of impending pain. Number three, you move your profit targets. So if your entry is down here and your profit target is up there, most people are willing to get out early, even though the trade eventually goes up and hits their target. All of that to alleviate the effects of fight or flight, which I think fight or flight response is the number one consequence of any type of system that is lagging. So if you're using anything besides what I'm about to show you now, there's an element of lag involved with it. So if you say, I use support or resistance, I use price action, I use volume, I use fair value gap setups, I use candle patterns, I use fill in the blank. You are inevitably waiting in the bushes all morning for something to happen. And when the something finally happens, you have no assurances moving forward what is likely to happen next. For how long will it happen? And so we're here to sort of address this primary question today, which is, do predictive institutional behavior patterns exist? Is it possible to predict what a market will do in the future? Now, if you look at the comments in the videos and the ads that we post on Facebook, the answer to this question overwhelmingly is no. You can't. Markets are random. They move in random directions, up or down, left and right. There's no way for you to know. And people are 100% convinced that that's true. And so what I want to try to do in the early minutes of the webinar is challenge that assumption. I used to be in that group. I used to say the things that people say to me in the comments section. There's zero possibility, no way to know, no way to predict what's about to happen next. You just sort of latch on to a statistically relevant edge and hope for the best over time. You have drawdowns, you have growth phases, you have plateau phases. It's all a proverbial, pardon the phrase, crapshoot. But I quickly learned about 20 years ago that my assumption was incorrect. Stephen Covey, author of the book, The 7 Habits of Highly Successful People, 6 or 7 habits, he said, a lot of people, most people have a preconception of how reality should be, and they dwell inside of that bubble. And so a lot of us today, I think I'm going to challenge, I hope I can challenge some of the bubbles that traders have either had imposed on them by people who sell lagging indicators and systems and gurus and the like, and maybe free our minds a little bit to see some of what is really happening in the world today. Now, I'm going to step into our software in a moment, and I'm going to show you that we had the times and directions for the market movements for Wednesday and Thursday in popular markets like the E-mini S&P, oil, gold, the DAX, the mini Dow, pound dollar, Ethereum. And I'm going to show you what actually happened 2 days later. Yeah, hey Roger. I love when people come in here and they say things. And so I would love to address what you're saying. Roger, I showed Firefly in my live training room. And of the last 12 times I showed it, we made $250 every day. So 12 times $250, 10 times 250 is 2,500. So that would be $2,750, $3,000. No disrespect at all, but we did it live and I have the recordings. Yeah, it sounds like you do. When you say something is garbage though, inside of a company that has a 4.5, 5-star review, it's time to sort of step back and always ask for help. I find it's more constructive to ask for help and reach out to people than just sort of declare this is how it is. So we have the times and directions for Wednesday and Thursday in advance, and I'm going to come back and look at those with you in a second, and we'll see what actually happened in the markets 1-2 days after the forecasts were published. Yeah, we're gonna look at gold here in a second, David. So let me pull this up just so I remember, David, to come back to it when we get there. Yeah, cool. There's gold. All right, cool. So let me ask you this question. In the upper right-hand corner, there are 3 values. It's telling me that there are 13 days till the next signal. There are 27 days until the next signal after that. And then there are 40 days until the signal after that. So you guys can see that I have the dates of the upcoming signals already on the right-hand side, right? Okay, so first thing to establish in this chart, and I'm going to tell you where the signals came from in a moment. These are predictions in the upper right-hand corner, which means that according to what's on the chart here, we knew when those signals were coming for at least 40 days. So in the top, if I put 40-day-old prediction, would everybody understand that that's a valid presupposition here? Right? I'm not going to put them on every one of the dots, but does everyone understand that the software in this instance is telling me 40 days in the future when the next signals are coming, which means all of these signals were known 40 days before they published. Is anyone confused about that or doesn't understand that? Now, as a general rule, what happens when we get to a buy signal on this chart with these signals here? What happens in Bitcoin when the prediction on that day was for a buy signal? This isn't a trick question, and I'm actually going to tell you what the source of the signals is. You're going to know how to use them free of charge, but I just want to get us all on the same page here. Everybody okay? Everyone's like, if I answer, does he charge my credit card? No, I do not charge your credit card. What happens at the buy dot more often than not? Price goes straight up, right? Okay, now watch. We'll deploy a very simple strategy. I'm going to buy on the day the prediction was for buying, and I'm going to sell on the day that the prediction was for selling. So right here, I'll come in and we'll increase the size of the text just so it's a little easier to see. And again, I want to challenge this idea that markets are not predictable. So we'll come in here, we'll buy on this day, we'll sell on this day. That's a $5,800 move. We'll buy on this day, we'll sell on this day. It's a $794 move. We'll buy on this day, we'll sell on the 20th. That's a $9,800 move. And I want you to take note of the fact that when we get to the sell signals, Earl, do you see how things are kind of slowing down? They're selling as we get into those sell dates. The market goes sideways and kind of drops when we get to those points. So if we look here and we come down and we look at the next signal, buy on the 1st of August, Gino, it goes down $993 and then goes up $10,731. On the next day in Bitcoin, on the 29th of August, it goes down $1,100 before it goes up $6,226, right? Okay. The next signal in Bitcoin, the candle opens and never comes back down. It has zero heat and finishes by the next sell prediction, $14,506. And now we get to this signal here. It goes straight up with no heat, $6,359 before it comes all the way down, negative $5,895. So if you add this strategy up, let's call this 11,000, 17, 18, 18 plus 10, 28, 38, 44, 54, 58,000 minus 6. Let's call this net $52,000. Hypothetically. And we've all kind of generally conceded, yes, Earl, we've generally conceded that when we arrive at a buying signal, it tends to go up straight away from that signal. Is everybody with me so far? Okay. Now, back when I was leading Bible studies and leafing through the good book, there was a verse, wherever you land on the metaphysical spectrum. I'm not sure where I am anymore. I know I don't believe a lot of things that I used to believe, but there was this great verse. It was in Corinthians. It said, I will use the ways of the foolish. Anybody know the second half of that verse? To do what? To confound the wise. It's a great verse. And now when I tell you where these signals are coming from, I want you to realize that a lot of people will see this as silly and foolish. And I have customers, I have one customer in Australia who trades with these signals. He averages $250,000 a month with options. And so everywhere you see a buy signal on this chart, and a sell signal is tracking a lunar apogee and perigee. What is that, you say? It's a weird thing most people don't believe is real. Let me take a look at a chart here, and I'll actually tell you where to get the dates. And I want to draw an image on here and just show you really quick. The moon travels around the Earth in an elliptical orbit. Our software is not based on this, by the way, so please don't leave. Stay with me just a few more minutes. There's a moment in the moon's cycle where it is as close to the Earth as it can be. And then as it travels around the Earth, there's a moment in its cycle where it is as far away from the Earth as it can be. This is called focal length 1 and focal length 2. My background, by the way, is a mechanical engineer, and so I do have the right to use big nerdy words like apogee and perigee and focal point. And so this program is quite literally tracking F1 and F2. In Bitcoin. And there's this really haunting correlation, if not causation, that is occurring. Now, if you'll hang with me just a few more seconds, this is a stock, you might have heard of it. They're voting on a near $1 trillion bonus package for my friend today. His name is Elon Musk. Mr. Musk is a modern day Thomas Edison, and I don't mean that in a good way. I mean that in a charlatan-esque, all hype, very little substance kind of way. But when I put the apogee and perigee dates on the price of Tesla, you'll start to notice that we have some of those same effects. In fact, if we come in and look very closely, Gino, do you see where these signals are aligning with exact swing highs and exact swing lows? This day is off by 1 day. And then down here, it's the exact swing low. It's the exact swing low. Man, it's so close. The exact swing low, right? There's something going on here. But for the sake of our argument, all you need to know is in the upper right-hand corner, it's telling me that the next signal is 40 days away. The furthest out we're looking on this chart is 40 days in the future, which means that when you're looking at the signals on the left-hand side, we knew that they were coming for 40 days. That was a 40-day-old prediction. This is a 40-day-old prediction, and so on and so forth. We've been tracking this in my advanced training room this week and watching this signal right here, this perigee event right here in Tesla. The price on the close of that day was $462.70, and we have since fallen to $435.17. And so if you're a trader who uses options, puts and calls, you could have had puts at the blue dots and been crushed. On this one, your stop would have been hit. You could have had puts on that dot and this dot. You could have used calls on the white signals. Do you guys know what a call is and what a put is? And you would have used something extremely foolish, but relatively accurate to understand when and in what direction Tesla was likely to go. Now, I told you I would give you the signals. I'm gonna right now. And I have a reason for this. I'm being very sneaky right now. I'm sneaking past your mental defenses. What I want you to see, and I've shown this link in other webinars historically, let me put it into our chat box, is that this is not a secret. In fact, men like William Delbert Gann and Wells Wilder and others like them who were considered crazy, idiots, charlatans, infamous in every respect, were telling us that this worked. Gann, when he was interviewed by Richard Wyckoff for the Ticker and Investment Digest in 1909, told him outright, "I trade using the laws of nature." And they were like, "What?" And in that very article, the editor, Richard Wyckoff, said, "Nobody believes Gann because he asks them to do research and to actually think." And Richard Wyckoff finishes his thought and says, "Most traders hate research and hate thinking." But Gito, if you look here, I'm going to change the dates from 2025 to 2026. And now I've just given you the turning points for Tesla and Bitcoin for the next year. In fact, I could calculate those dates for 2027. I now have the turning points for Tesla and Bitcoin 2 years in the future. So when we come back and look at this chart, how many days in the future did I know when these signals were coming? It's not 40 days. I started trading 20 years ago. I could have had advance notice if I understood this 20 years in the future. We have the signals for Bitcoin and Tesla for 20 years in the future. And if I didn't tell you what the origin was, if I said it was some black box proprietary thing, if I told you it was signals generated by AI, everyone here who didn't know would have bought it. And I'm telling you for free where it's coming from. Now, why would I do that? Because I want to challenge the assumption that you've made, that you've been told that markets are not predictive, and give you something that you can go back and research on your own and apply these signals yourself on this chart and see. We're looking at literally one of the most liquid markets in the world. Everything is crypto now. Love him or hate him, the Donald Trump administration, the family fortune, it's nearly doubled since the introduction of Trump coin and Melania coin. This is the way of the world now. Many are theorizing that the United States will use blockchain and cryptocurrency to escape from underneath its debt. We'll create a national coin. And so when I started trading, it was oil. We were all trading oil. It was volatile, it moved fast, and now it's crypto. And all I see are turning points about half of the time, nearly exactly, on these predictive signals. Okay, let's keep looking. This really starts to get interesting for me. The further we research this and the larger the rabbit hole gets. This is a stock, same method, same means of calculation. You might have heard of this one. This one is called Palantir. I've mentioned in the past webinars, there is a connection between Palantir and the current administration. Let's go to ChatGPT so I'm not accused of being political. What connection is there between Peter Thiel and J.D. Vance? There's Mr. Peter Thiel. There's Mr. J.D. Vance. Vance worked at one of Thiel's venture firms, Mithril Capital, for a period. Later, Vance co-founded his own venture firm, Naraya Capital, with backing from Thiel. Did you know that? Thiel has been a major donor to Vance's political campaigns, significant financial support to the super PAC backing his Senate run in Ohio. Media describes Thiel as playing the role of kingmaker in Vance's political advancement. However you feel about them, pro or con, there's a connection between Mr. Thiel's company and the current administration. Well, here's what I see. I see a signal that's 20 years old right here on Palantir. I see signals that are no different from the ones that we were looking at on blockchain a moment ago. And I'm looking at what happened on May 12th. And I'm looking at what happened on June 9th. And I'm looking at what happened on July 7th, as well as August 1st, August 29th, September 26th, and most recently, October 23rd. I don't have to defend this system to you because I've given you the inputs and the outputs. This chart is the Orion indicator in the Alpha suite if you're a Force user or an Alpha subscriber. And we're using Tachyon Orion to display the apogee and perigee signals. I haven't even looked at the data mining software yet. And so now ask yourself if you took a call or placed a call at every one of those white dots and what's happening now at the next put opportunity. So we're coming back and sort of re-challenging this idea that markets are not predictable. They're not predictable. Well, the evidence seems to contradict that. In fact, this is one of my favorite charts. This is NVIDIA. That guy from NVIDIA, by the way, what's his name, the CEO? Boy, he took the Steve Jobs thing and he ran with it. If there's anyone who's emulated Steve Jobs successfully, it's Leather Jacket Jensen. He gets up there and he holds these little shoebox-sized computers and tells you you could hack Mars with it. And it's just $4. You're just like, man, he is crushing the keynote speech. Well, many people will tell you that NVIDIA is basically supplying the AI bubble. NVIDIA is a compressed air tank every day inflating the AI bubble. And these are the signals. But these signals are actually based on something else, the ones that I found best align. Everywhere you see a blue dot on this chart is a third quarter lunar phase. Everywhere you see a blue dot is a third quarter lunar phase. Everywhere you see a white dot is a first quarter lunar phase. Now, I talked about this in the last two webinars. They're recorded on our YouTube channel, right? And so if you use that as a backdrop, I'm now looking at the next phase 3 signal. It's coming in 3 days and 23 hours from now. Where else can I find that information? Well, I can come here and type Lunar phase calendar. And now there's a website called Time and Date where I can get the first and third quarter moon phases for 2027. And I now have the turning points for NVIDIA for 2027. I'll go ahead and go back to 2025 And I'll paste the link to that website into the chat box so you now have it. I freely give you the information. It's yours to have. Okay, and it's been happening for quite some time. It's not just recently. Here's 2 years of those signals. What happens at the blue dots? What happens at the white dots? Here, I'll take my chicken scratch off of here and look for yourself. What happens almost every time at those signals? Let's stretch it out so you can really see it. So Gino, everyone in this room, can I say that generally speaking, when we arrive at a blue sell signal in NVIDIA, most of the time, more than half, the price falls. Or in an uptrend, slows down with a small retracement, right? I'm just drawing the lowest hanging fruit here. And can we say most of the time, more than half of the time, when we arrive at a buy signal in NVIDIA, which is a first quarter lunar phase, the market goes up until the next sell signal, right? We'll pick the ones that didn't hit their stop, the low hanging fruit, right? Signals where you would have got in the money if you had a call, right? Those are the really good ones. So again, if it's knowable, what if I told you to forget everything I showed you from here on in? Forget I ever showed you this. Because that's what, if you believe our web host reports, when we track who actually purchased the software after everything they saw in our video training and our demonstrations, only about 15% of people actually sign up, seeing everything I've shown you so far. That means 85% of people don't believe what I've told you, even though I've given you the source for the signals. 85% of people would still rather be surprised. And that fascinates me. It 100% eludes any kind of logic for me. Now, here's the NASDAQ on a daily chart. And I want to add one more layer to this before we start to look at the intraday charts together and discover how data mining can tap into this reservoir of predictive information. In your GoToWebinar toolbox there should be something that says handouts. It should say Histogram Guidebook V3. And this is a book that was written in 2016. Let me show you real quick. You'll see that example here, Gino, on page 5, where it says CL0716. So this book was originally written in 2016. When you start to really pay attention to time, you understand that it's more physics than fundamentals. It's more Neil deGrasse Tyson than Jim Cramer. There are rules. Because it's based in nature, physics takes a large part in it. I've studied it for almost 2 decades of my life, and I'm convinced of this. When you start to study time signals, you notice there's a depth to it. For example, after a while, somewhere in the 8 to 12 week mark, customers begin to observe a weird phenomenon. Phenomenon. Got that out of my head. For example, if you arrive at a predictive time, which was supposed to be a buying signal, if you arrive at a predictive buying time, let's say this day was supposed to be a buy day, and that signal candle, the one to the right of it or the left as well, if any of these three candles have broken the previous structure high, there is a tendency for that signal to go backwards or invert. It's the fifth signal we discovered, so we gave it a number 5. And when you watch those signals transpire, more often than not, they do this. And this was an example from it when we were marking them by hand nearly 9 years ago, almost a decade ago. Now, fun fact, Earl, can you see what happened in the NASDAQ 9 years later when we arrived at a first quarter lunar phase? And that candle looks identical to a 1 minute NASDAQ candle from 2016. And if we reference the prior swing high structure, and we note that candles number 1 and 2 and 3 were all brand new highs, can you guys see that there's an element, there's a second layer of elemental predictability? We can even predict when the signals are going to go backwards. And so in my class and amongst my trading partner conversations, we've been talking about this reversal. We saw it when it developed. We thought, here comes the end of the uptrend. You'll see other examples of that as well. Let me erase these drawings. There was a pattern 5 on candle number 1 for July 31st. There was a pattern 5 for candle number 3 of July 3rd. And what you'll see in those instances is price stops going up. If anything, it starts to push down. Price stops going up and pushes down, And this last signal is no different. Price starts going down. The antithesis of that was true. When you begin to study predictive times, you'll see that when you arrive at a selling pressure signal, and that candle is the lowest low of the swing. This is a 9-year-old book, remember that. There's the prior swing. Here's the prior swing. If candle numbers 1, 2, or 3 break that low, like it did here, what tends to happen? It tends to reverse and go in the other direction. And so if we look at the next page, look at what happened after October 10th, and look at what happened on a 1 minute NASDAQ chart in the June contract of 2016. So all of these things are happening with a ludicrous system, a system based completely on the size of the moon in the sky, which is insane. Or is it? One of the most popularly traded markets, one of the most skyrocketing stocks, Palantir, almost every pivot is one of those crazy dates. One of the most accelerated get-rich-quick stocks, NVIDIA, driving the AI bubble. No one in this room said it wasn't less than half of the time. It was more like 60% of the time the signals are spot on. And then when we come and look at Mr. Thiel's partner, Peter Thiel and Mr. Musk were partners, we're looking at 20-year-old signals on Tesla that are playing out live. Regardless of the fundamentals, regardless of what the talking heads are telling you, regardless of what Kathy Woods of ARK Investments, who's saying things every day and none of those things are true, tells you, the world kind of marches on and this weird natural law exists. So what we set out to do on an intraday level, let me show you this, is look at time closer, right? Because none of what I've shown you is sort of helping us intraday, right? And so let's just do a quick example here at a low level. Let me pull back here for a moment and then go back yesterday. And two. Okay. What if I started paying attention? These are yesterday's moves to when the reversals are occurring. What if I started paying attention? These are yesterday's moves to when these up moves and down moves are occurring. And if I perceive that markets are maybe predictable or more predictable than I thought they were, maybe these times are very, very, very important. And I, just because a guy with a thick Russian accent or my British guru in my overpriced mentoring situation, he told me markets weren't predictable, and so I wasn't paying attention. What if I took these times from yesterday and I started overlaying them on another chart? What if I took these times as predictions for today? Let me take a screenshot of that. Give me a little bit of rope here, if you don't mind. 1016. So these are yesterday's E-mini S&P 1 minute signals. And now I'm going to come into today. And if you'll bear with me, I'm going to write a few things here. So my first signal was 944. My next one was 958. My one after that was 1004. The one after that was 1007. The one after that was 1016. Excuse me. So without going too far down the rabbit hole, can you guys see what I'm doing here? I'm looking at when the market moved yesterday, and I'm comparing it to what actually happened today. So when I drew 944 here, this is the corresponding signal up today. When I took 958 yesterday and we said, let's see what happens 24 hours later, this is what happened at 958 today. When I said 1004 here, here's 1004 today. Here's 1007, 24 hours later, 1007, and here's 1016, exactly 24 hours later after 1016. So Gino, is there any correlation with what happened 24 hours ago and what happened today? Enough for us to maybe dig a little deeper? Yeah, all of a sudden there's a bunch of questions coming to mind. Why is this happening? Why hasn't anyone ever told me about timing signals before? How much of my life have I wasted? And then I'm sure there's a signal over here. Can you see, guys, where it says 9:30? Yes, on today's chart, I'll just draw a 9:30. And then yesterday, look, that was yesterday. And here's 9:30 today. Down, up, down, up. So no one's ever really told you that this exists. And no one ever told me. I had to forge this with my partner on our own. We had to figure this stuff out together. Now, imagine there was a way to do all this stuff without having to draw on the screen. So, for example, we're going to come in here and we're going to use a tool that has a 4.5-star rating on Trustpilot. It's called Time Warp. And now watch. I'm going to come in here and ask the computer, go back and look at yesterday. So it'll say, go back one day in the past and project all the turning times from yesterday onto today. That's all it's doing. And now, Gino, when I hit OK, it's doing thousands of calculations. Right? Now check it out. What does this chart look like? It looks a lot like the ones we were just studying a moment ago, didn't it? Except now on the right-hand side, we have predictions. It's not in the corner anymore. These are dots on the chart. There's a down move at 617. There's an up move at 626. A down move at 646. An up move at 652. What's happening at the buy and sell signals? More than half of the time, what we were waiting for actually takes place. More than half of the time, what we're waiting for actually takes place. Now, these signals are only 24 hours old. And so as we begin to scroll back into this morning, there's that exercise we were doing a second ago, right? Yeah. Any questions at this point? The signals that we put out for future forecasts are based on a different look back. Those are based on a 714 look back. We're looking at the last 2 weeks of signals. What do I mean by that? It means that every signal on the chart that's coming is 7 days old. Let this chart populate in a second. There we go. So now this chart is the one that correlates with this. So Thursday, E-mini NASDAQ, 1 minute chart. There we go. I'm gonna blow it up so you can see it. That's what she said. And this chart has been available for how long online? Can everyone see where it says added 5 days ago? Screencast uploaded to it. 23 people have been watching it 5 days ago. These were the buying and selling times that the program gave us, all the customers, for the 1 minute NASDAQ 5 days ago. Now that's important because these signals here on the right-hand side of the chart are the farthest from the forecasts, meaning I have all the times for Wednesday published 5 days ago, and then all the times for Thursday. And these are the very last signals in those 48 hours worth of setups. And when I come and I compare that to what actually took place, Gino, what happened? Let me see if I can highlight this. Yeah. What happened at the signals? Oh, this is the ES. I got to get the NQ. Sorry. And so when we look at the NQ this morning, and you look at what happened at the signal times, it's the same as the apogee-perigee chart. It's absolutely the same. The blue dots were at the actual highs. The sell dots were at the actual low. What happens many times is a customer will come in and they don't have a trading plan. They start swinging for the fences. Every signal is a signal. They buy and sell at every signal. They don't have any filters. They're not using trend to filter or counter trend to filter. And so I'll tell you the system that is in the training guide in the customer lounge. It's published in there. It's called the 4 basic setups. And I'm happy to teach them to everybody here today. They're published in the Customer Resource Center. It's one of the first things that customers receive when they get their onboarding link. And there are 4 trading setups that are taught. We'll focus on the first 3. The first one is called the signal with trend. The second one is called a puncture trade. The third one is called an aggressive counter trend trade. The fourth one is a little weird. It's called a CDOS, close in the direction of the signal. We'll cover the first 3 here today. So these times were available to us 5 days ago in the NASDAQ. And what we'll see here is the following. And this was all documented prior to the webinar. Just so you know, I'm not making it up as I go along. I've published this now for the better part of 10 years. We will be showing how the signals can be traded by using one of 2 simple entry rules called signal with trend or the puncture trade. And so what we're doing here is filtering the time signals in the direction of the trend. So we have a 120 period exponential moving average. Now, is this the only way to trade with this? No, but I show it because when we survey our customers, about 2/3 of them who are reportedly net profitable are trend traders. And so it's important for me to teach the system that I think is the simplest and the most, widely adopted. So let's take a look here. We're using a 120 period moving average for this example. Our stops are set at a 1.5 ATR value away, which means the distance of a 1 minute bar on average plus half a bar again away. And so for our trend signals, we'll be using a 1.5 ATR stop. If you want to have it tighter than that, most market analysts will tell you anything under 1.5, you're risking being stopped out by market noise. No lower than a 1 value. 1 ATR value is about as small as you can get away with, especially in a volatile market like the NQ. And so now we're able to come in here, and ironically, we can deploy this on those apogee-perigee charts, on those first quarter, third quarter charts. And we could say, listen, at 9:01, the program is warning us that there's a historical down move that occurs until 9:08. And so we can enter short at 9:01, and we can hold it now until the close of 9:08 for a $47 winner. So that window exists historically. We're leveraging the fact that they may show up a second time, a third time, and do it again. So 47.50 is approximately $940 net profit. When we look at 914, we're going to exit at 917, signal with trend for another $120 or so, $120. At 931 at the open, and we took this trade in the live room today, we're going to exit by 941, which is a $31 move, or about 20 times 30, yeah, $600 trade. And now, as we move forward into the future, there's a signal at 9:59. And if you hold it all the way until 10:23, you made nothing, which is fascinating to me. In our class, we use a 2-to-1 RR target, a little more advanced than the basic systems from Thursday. You guys who were in my class this morning were with me. You saw this live. We entered short at 25,531. Our stop was above at 25,587. We held it until 1-to-1 RR, and then we moved our stop from there to break even. When the signal got to 150%, or 1.5-to-1 RR, we moved our break even to 100% of risk. And then when we moved to 200% or 2-to-1 RR, we took our target. So in the live room today, in the recording that I just published, we actually took over $100 in the NQ. Okay, so signals with trend. The next one coming, we're not going to count this because those aren't the rules I published. It was break even. The next signal, Richard, was 1035. And 1035 was a 5-day-old signal. And so if we use the basic criteria that I published on the page before the webinar for the last 10 years, we're going to enter at 25,447, and we're going to exit at the close of 1046. And so this signal with trend to here is an $86.75 move. Let's keep going. So from 9 o'clock, we're looking at $47, $5, $31, break even, and $86. Between 10:50 and 10:57, my room closes at 11 o'clock. We log another $28 winner. $28 on the NASDAQ. Now, there's a second half of this. We talked about the puncture trade too. The puncture trade is based on, forgive me, the failure of a counter trend signal with trend. So for example, we have this stop level right here. The stop level is 1.5 ATR values away. And so what that's telling me is historically from 941 to 959, there's a move up. So we can try to catch a bottom and pick a top, right? But what I try to do instead is I put a sell stop 1 to 2 ticks directly underneath that line. I put a stop to sell right underneath the stop of the buy line. Now, why do I do that? Because a failure of a buy signal with trend equals a trend signal. The way that I kind of like to communicate that is a double negative. Right? -5 times -5 is positive 25. So in the case here, we don't cross the 2 ticks through the line until 9:52. And what I think that represents is there was profit taking here. You can see the buyers do come in and they do drive the price up. There's this fish hook, right? That kicks up just like it did on the apogee, perigee charts, just like it did on the first quarter, third quarter charts. And so that's when all the profit taking is over and then the trend resumes. If you're a volume aficionado, we could call this a redistribution phase in here. There's lots of ways we can characterize this. And then it continues. So I'm in on the puncture right here. We traded that this morning. We use a 1-to-1 RR on the puncture. I put a stop right above the candle, which drives through the line. And now we hold it until the next signal. You can also trail it, but for the video that was included with this webinar, we get out at the next blue signal. And so that trade was a $51 trade or $1,000 per contract. And I'm not making up these rules. They've been published with the webinar link and predictions now for close to a decade. Same thing over here at 10:23. We do have a bit of a push up, and then the profit taking is over. The candle punctures the white line at 25,463.25. Our stop goes right above that candle. It drags us down into the next signal, and that's a $16.50 move. There are no more punctures over here. There are 2 more here. You can see an example of one right there. So the stop level at the 1.5 ATR level generated by the 917 signal is at 25,694.25. There's profit taking here, and then it's finished. And so we break through the line 2 ticks underneath at 25,693.50. And so this is now a puncture. That is the sell stop that carries us in. Our stop goes 1 tick above the puncture candle. We're going to hold it until the close of the 931 signal. So this is the puncture, in and out. That's a $39 move right here. So when we're moving through here, we have the punctures, then we have the signals with trend. And so using a system that we developed 17 years ago and published the rules for in advance, publishing the predictive times in advance, there's well over $2,000 in profit between 9 o'clock and 11 o'clock. So we can come in here and adopt that strategy with other tools as well. We can come here and apply a program called Firefly. And let's put 120 period moving average on top of there, which is what we show in the room. Let that load up. Okay. So when you're using Firefly, this is the program that Roger says doesn't work. What you would be doing is selling at the sell signal and buying at the buy signal with trend. So there's a $12 winner. This is a $17 winner. That's a break-even trade. The next signal is at 940 and you exit at 944. The next signal is at 954, you're exiting with plus 59. The next signal is at 955 and you're exiting at 1006. The next signal was a stop out. You put your stop above the high of the candle. That's a $24 loser. The next signal is short at 1013 and you exit at 1016. The next signal is a stop out, of course, minus 15. The next signal here is a loss, minus 10. Then another loss. You have 4 losses in a row, 725. And then you're short at 1030 and you're exiting at 1039 with a $142 move. So this is the program that Richard says doesn't work. Plus 12, plus 17, 0, plus 40, plus 60, plus 108, plus 6, plus 143, minus 10, minus 15, minus 7, minus 24. So generally speaking, when you have a trend trading system or a trend following system, you're going to have anywhere from a 50 to 55% win rate, and you're going to have a profit factor somewhere between 1.5 and 2.0. And so there are drawdowns, there's losers in any models, but with a trend following system like the one I showed you with the time signals, or with the Firefly signals, or coming all the way over now back to Tesla, right? You can use that same strategy, entering at the buy signal above the moving average, exiting at the sell signal. So there's a $12 move. And then with the puncture, you're entering when it crosses through the blue line and then exiting at the white line, plus 62. Now you're entering here and basically finishing break even. And then this last signal in Tesla long at 1023 and out on November 5th, plus 13. So one after the other after the other. When this candle closes above the moving average, that's called a crossover. The stop goes below the candle. And now you exit right here for a $16 move. So if we use the same setup and rules and signals that we were teaching for the time signals, whether it's on the E-mini S&P, these are the signals from the 5-minute chart. Now we can apply that to Bitcoin. We can apply it to Tesla. We can apply it to the E-mini S&P daily chart. We can apply it to the gold 5-minute signals. It's also the same thing. So any questions about how we actually trade with the signals once we get there? And that's not to say there aren't other ways to trade with it. You can use Bollinger Bands, you can use Keltner channels, you can use volume profile and fair value gaps and whatnot. But when you're trading, I have found that it's best to emulate success. And most of our customers, these are the signals from yesterday, by the way. I just wanted to come full circle. So the signals that we published for yesterday, let me put those times up here real quick, just so you see that I'm not lying. 12:05, 12:50. Here's Wednesday, November 5th. Load that up. There it is. See where it says 12:05, 12:50, 155. 12:05, 12:50, 155, 7:40, 7:40, 8:15, 8:15. So these signals were published 5 days ago. And if you traded them with trend on the E-mini S&P 5-minute chart, you were long at 8:15, exit by 9:20 for a $9 move. If you were long at 9:35 on Wednesday, and exited by 10:05, it was a $25 move. If you were long at 10:55 and exited by 11:30, it was a $7.50 move. If you were long at 12:05 and exited at 12:50, it was a $10 move. And 1:55, you can actually see when the trend is weakening, when the buy signals start to develop a loss. And that was a $4.50 move to the downside. And then at 3:10 in the afternoon, if you go all the way out, you gave back $6 from the gains prior in the morning. So the first place you start to see weakening in an uptrend like that, a lot of times I'll take a vertical line and I'll put it on the chart and I'll say this is where the trend is reversing. The first buy signal in an uptrend that fails, drop down. And this is where the trend is starting to reverse at that point. Okay, so those are the signals on the E-mini S&P from yesterday. What is that? 934, 41, 51, minus 5 is 46. So about $40 in yesterday's E-mini S&P, hypothetically speaking, which is a $2,000 net gain on Wednesday. So kind of coming full circle, we're sort of looking to answer that question. Do predictive patterns exist in the market you trade? I've kind of shown you 3 different methods you can use that are free, right? We're not asking for anything in return for those. And then we started delving into the data mining aspect of it. Time has so much to offer, both from a natural law perspective, and then when we get into the data mining side of it, there seems to be this Pandora's box that opens up where we can do a lot of things if we have a program to compile that information for us. And when we challenge that assumption, there's an ability to sort of come in and apply a systemized set of rules to that and alleviate those issues that we had with the fight or flight response. If we know when the signal is coming, we don't have to overtrade because we have an appointment with the market at that point in time. If we know what direction and what time the signal is coming, we don't have to move our stop because the signal either works now or it doesn't. We're not second guessing it. And if we're in a trade that's working, we know how long to stay in it because every trade that has a beginning has an end. We know between 8:15 and 9:20 is the window. We know between 9:35 and 10:05 is the window. We know between 10:55 and 11:30 is the window. Between 12:05 and 12:50 is the window. And so all of those moves in between that are designed to sort of shake us out of the move, it's just window dressing. It's an illusion. It's an algorithm from JP Morgan trying to shake you loose before it goes towards target. So it takes a lot of those emotions out of the way. In fact, if you do get a chance to go back and read through the reviews of the people who've been trading with it for some time, you'll start to see that come through in their language. They'll talk about how the signals have kind of given them that 3-point advantage. I know when the signals are coming. I know how many of them there are. I know how to stay in the trade longer. This isn't a customer, by the way. This is someone who didn't buy the software, which is funny. Read the responses to some of those too. I think it's pretty hilarious. So these people, when you read through, are all kind of saying those same things. They know when the times are coming in advance. They stay in the trades longer. Their stops are smaller. than they've ever been. And that's kind of what we're trying to offer here today. Another perspective, another insight into what your market is likely to do. We published the times for Tesla on a weekly chart, and the webinar I first told you guys about the signal on the weekly chart was back here on the 15th. And I mentioned that we were looking at breaking the all-time high on or before the week of November 21st. We're pretty close to that. That's $474. We're almost at the $488. And so since that prediction in the webinar that week, we've gone up in Tesla $140, and it's gone against you $16. So almost a 10-to-1 on the maximum favorable and maximum unfavorable excursions there. On the gold chart for daily moves, that one has been just out of the park. The selling pressure signal that we warned you about was October 14th. It didn't kick in for 2 more days, which was weird. Like there was this emotional sweep or carry through. And now we have the signal on October 27th. What's concerning to me about gold on the daily chart, you notice here how, Earl, it's not really advancing much. They're consolidating here. So this signal is very different than what happened on September 24th, what happened on August 8th, what happened on July 7th, what happened on June 4th, and May 15th, and April 14th. It's just stagnating here. And this tells me that whatever drove this rally in gold might be over right now. So that's what's happening on the gold chart. And there's lots of other markets that we can apply this to, weekly and daily timeframes for larger swing moves. And so if you're an investor or a swing trader, this definitely works for you. If you're looking at SPY or QQQ or any ETFs that you're trading, you can get some really good insights as to when to maybe maneuver your portfolio around. Also wanted to let you know that this is available for TradingView. There's a version of this on our website called Chronos. And it's doing the same thing that you're seeing populated over here on the warp side, but for TradingView. And so the only difference with TradingView is we don't have the histograms on the bottom, and we can only publish the next 5 times in advance. This is a limitation of the platform. They are only allowing us a certain number of lines of code to program the software with. And so we had to basically strip it down to bare bones to get it to work. TradingView, as many of you know, is a web-based platform. And so we're still able to make it work. You can change the time frames, for example, to here. And now we go from a 1-minute to a 5-minute chart, for example. And you can see those signals go up from a 5-minute to a 30-minute chart. And you can see it recalculate those signals. Now, if we wanted to look at crypto, for example, do the same thing. We can see those signals as well. And so TradingView affords us that opportunity through a program called Chronos. Back on our web page, you want to take a quick peek with me there. Go to our trading tools box, and the version that's available for Warp is the one that works with NinjaTrader. So if you're interested in that, if you can, NinjaTrader I think is the preferable platform, but if you're using TradingView, the variation of the time program is called Chronos, and you can take a deeper look at that as well. All right. About 150, 120 plus years ago, the guy who first really leaned into time sequencing in markets, love him or hate him, he kind of shook things up, said the following: time is the most important factor in determining market movements. And by studying the past records of the averages of stocks, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. There is definite relation between time and price. And so I feel like we've sort of definitively answered that question here today. Is a market subject to predictive forces, and whether we're coming at it from an astronomical perspective, I guess you'd say, or an engineering kind of brute force data mining method. We're able to replicate those results in charts. We can teach a very basic trading system to surround those signals with, again, signals with trend and punctures, and you can sort of see the benefit of compartmentalizing those setups, or signals rather, into setups with established risk values and a known duration for the profit taking. Well, thanks. I appreciate your time here today. Thanks for hanging out with me. We went a little bit over. I usually stop around 5 o'clock, but I wanted to show you those other signals as well and sort of lean into the apogee, perigee, and lunar phases a little bit, because I think that's going to be very helpful for some of you in sort of embracing what we're talking here today and apply that concept a little more confidently to the intraday signals. I hope this has been helpful for you, and I hope you found it valuable and educational. Take advantage of those web pages that I punched in there. Line up some of those signals for yourselves on the markets that you're trading, and see for yourself that, in fact, it is happening. Yeah, no worry, Dustin. If you need to reach me, the thing that I would highly recommend you do, we do have 3 traders that are working for us on staff, people who are using the software, BackToTheFutureTrading.com. And one of the great ways to connect, if you're interested, is where it says product walkthrough. If you click on that, and Dustin, you fill out your information here. Yep, working with David, he'll get you squared away and set up. Not a problem. Yep, anybody else who's interested too, highly recommend it. Everyone who's working with us on staff, they're using the software, they're trading with it. You're going to have a really great experience with them, and they're very helpful, and again, can teach you some things that maybe I forgot to cover here today. May the wind be at your back. May the sun shine upon your face. May the valley rise up to meet you. May the mountains lay low before you. I wish you peace. I wish you prosperity. I wish you health and fellowship. All the things that you wish for yourself, I agree with you here today. Whatever brought us all together, I believe we were meant to be in this webinar with one another for a reason. Wherever you're at in your trading journey, take what you saw here today and apply it. And if none of this works for you, none of it meant anything, I did my best. No harm, no foul. And I'm grateful that you spent your time here with me today. I love you all. Have a great afternoon, and I'll see you soon. Take care. Bye.